In this video, we are going to be analysing Mullen, ticker MULN. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, what you can see is we're currently sitting at about 82 cents. Don't forget, we only broke that dollar about a day or two ago. So again, a serious decline in price. We're down about another 10% just today. Now, what are those key levels I'd be paying attention to on Mullen then? So as always, we do talk about the 6-month and the 1-year chart. Considering on this stock, most people watching this are more likely bag holding than looking to trade it kind of more reasonably. Obviously those key levels where we would start looking to trade it is short bias at kind of 520, 665. But if you're someone who's already bag holding, or maybe you're looking to try and buy this bottom, which again, nothing I would ever personally do. I think there's always a lot of risk on the table. But what we can do is scroll down to a 5-day chart and a 10-day chart. And again, this will allow for kind of closer targets to where we currently are. So maybe if you're potentially bag holding, you can find areas to be cutting losses. And maybe if you don't have a position, but you really want to be buying this stock, then again, maybe where are the good targets to be buying in? Again, like I said, not something I'd be buying at all, even though we are at all-time lows, doesn't mean it's a good buying opportunity. Now, what I'd be looking at, we're currently at about 81 cents, 82 cents. If we continue to the downside, we have 75 cents. I think this would be quite a key level. Not only is it a psychological level, so you'll probably see a bounce coming into this level anyway, but it is also our first deviation on that 10-day. Again, these are shorter term timeframes, 5 and 10 days. They're not going to be super strong. They are going to have to really be day trades. It's not anything I would be swinging off these levels because they're just not going to be strong enough. It's not like we're looking at the 6-month and the 1 years. So again, they're more day trading opportunities, just get in and out relatively quick if we're trading them. And again, if we're cutting losses as soon as they get out, probably a better idea just to be getting out. So 75 cents and right below at 71 cents, we do have our first deviation on that 5-day chart as well. So those would be the two key supports I'd be paying attention to. Probably going to be targets for the time being, so we'll probably continue down to at least 75 cents before seeing any sort of bounce. Now, if we want targets to the upside, again, obviously, like we said, if you're not already in the position, not anything I'd be trying to catch short at these lows, because, again, you're still not going to be getting a great risk to reward, and that's when we talked about those longer 6-month chart and the 1-year chart, so the 520, the 665. Again, if you're not already short, those are the levels I'd be paying attention to, because, again, if it's to get to there, the stock is going to be popped, it's going to be overvalued. Again, we can play that longer term trend, try and play that pullback. But if you're potentially bag holding now, then where would be targets where we'd at least, if you're not willing to cut all your losses, at least trying to trim some size. And we would have a 98-cent resistance and a $1.07 resistance. Again, this is going to be our first deviation on both that 5-day and 10-day chart. Now, the problem, I think, even with cutting losses here is, do we get back to these levels? Yes, we're at 52-week lows. Yes, we'll probably see some sort of a bounce. But coming back to that $1 or even breaking it to that 107 can be very difficult. We may see a pushback to $1, but again, considering the fundamentals of this company are quite weak, considering this company has been diluted or the shares have been diluted, it's not really throwing confidence into shareholders. It's probably not going to go higher. So even pushing back to that dollar, we're probably not going to break that. So that 107 will probably be quite unlikely. I think at a peak we'll see that $1. But that's about it. And again, in time, we're probably now going to see the reverse stock split because they are now trading below that dollar. Quite unlikely that we start trading back above it naturally. So again, we'll probably end up seeing a reverse stock split coming on Mullen in the near future. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe? If you want your own stock analysed, throw that in the comments. And why don't you check out this analysis video?